Hello, my name is Scott Broughton. I'm president at ICBA Bancard. Today I'm with my colleague, Deborah Matthews Phillips, Senior Vice President of Payments and Technology at ICBA, and she's also Senior Vice President of Industry Relations for ICBA Bancard. Our discussion today centers around buy now, pay later. Amid the surge in e-commerce transactions, a new payment option has grown rapidly in popularity and is expected to continue capturing point of sale lending volume. Buy now, pay later is dominating the headlines, cropping up on merchant checkout pages, and not surprisingly, also catching the attention of policymakers. We're going to spend a few minutes today breaking down what community banks need to know about buy now, pay later. So welcome, Deborah.
Yeah, thank you, Scott. It's great to be here with you today to talk about this important topic.
Well, thank you for being with us as well. For starters, what exactly is buy now, pay later?
Well, that is a great question, Scott. And I'm sure that you and all the Bancard listeners have seen the buy buttons on e-commerce sites from the various buy now, pay later companies, Klarna, Affirm, Sezzle, PayPal, Afterpay, the few of the names that you might recognize in the space. And if you think about it, the concept is not really new. Do you remember layaway?
Oh, yes.
A lot of the department stores offered layaway.
Yep.
So what the difference is now, Scott, about buy now, pay later is that the consumer gets to own the products that they're buying immediately instead of having to wait for them until the item is paid for, as in the layaway model. And this really seems like a new payment mechanism, but at the heart of it, it really is just consumer installment lending. So here's how it works. Buy now, pay later is a payment method that lets customers pay for products from a merchant or a business at a later date, typically in installments. The business gets paid immediately by the buy now, pay later provider, and the business receives the full amount minus a transaction fee, which can run anywhere from 3 to 6%. And some buy now, pay later companies also charge a nominal fee of like 30 cents or so in addition to the percentage fee. The merchant gets paid in full for the purchase because the credit is extended to the shopper by the buy now, pay later company. And so it's up to the buy now, pay later provider to recoup that money from the customer. And the consumer doesn't pay interest unless they're late with their payments, typically, which we'll talk about in a few minutes. And if you are familiar with the PayPal pay in 4 model, the consumer makes the first payment of 1/4 of the purchase at the time of the purchase. And then the other 3 payments are spread across a defined interval, such as every 2 weeks or monthly. Now, here's where it gets really interesting. This is not just for larger purchases. I've seen buy now, pay later offered on small purchases. So the other day I was out at the Sephora website, one of my favorite websites, and I was looking at a travel size bottle of hair product. And the total purchase would have been $13. And they were going to split that into 4 payments of $3.25. But do keep in mind that most buy now, pay later transactions are for purchases anywhere between $100 and $250. And one last thing, Scott, I want to debunk a myth that buy now, pay later is just for t-shirt and sneakers type purchases. We're starting to see a trend with buy now, pay later where installment loans are available for more expensive purchases, things like airplane tickets. Some buy now, pay later companies are targeting purchases with extended installment terms, such as 24 months, it's really similar to what you would think of traditional installment lending. And they're starting to focus on specific vertical markets, things like education tuition, healthcare, veterinary services, auto repair, things like that. And the buy now, pay later companies that are specializing in these vertical markets are performing the necessary underwriting.
Well, sounds interesting. So now that we know what the buy now, pay later is, let's explore who's using it and why.
Well, contrary to popular belief, it's not just young people. I've looked at a lot of reports in order to prepare for our conversation today, Scott,
Mhm.
and it's hard to get it's really challenging to get a clear read on actual usage. But what I have discovered is directionally, it's obvious that buy now, pay later is making significant inroads as a payment option, and more merchants are offering it at their checkout. And I think this growing popularity of buy now, pay later is a reflection of the dramatic increase in consumer e-commerce. Just yesterday, I read an article that said that 1/3 of US shoppers have made online retail purchases in December for the holiday season, which is really not surprising given the transition to using e-commerce and digital transactions, which has been accelerated by the pandemic. But you're back to your question: who's using it, and how much usage is there? We know that buy now, pay later has increased rapidly. One estimate is that 45 million Americans used it in 2021. 36% of buy now, pay later users have used it more than once a month. We've discovered that the preference for the buy now, pay later solutions is strongest among consumers earning between $50,000 and $100,000 a year. So your next question, Scott, I'm anticipating is, what's the outlook? Where is this going?
Right. What's the
So
appeal to the consumer?
that's right. So, well, consumer spending through the buy now, pay later market is projected to quadruple between now and 2026. And that's not surprising when you consider that 2/3 of consumers that have used it say that they plan to increase their use of it. And as many as 3/4 of non-users have said, well, that looks like something I might want to try. And again, it's not just the younger generation, but certainly they have adopted this in waves. Cornerstone research says that in 2019, only 6% of Gen Z used buy now, pay later. They said in 2021, that number had grown to 36%. So if that gives you an idea of the dramatic growth in adoption, I think, buy now, pay later is probably here to stay.
Certainly sounds like it. So is there a downside for consumer to consider making before doing one of these purchases? Is there a
Well,
downside?
yeah, actually there is, Scott, and I want to spend a few minutes talking about that. If you look at what the appeal is for consumers, buy now, pay later users say they like the transparency regarding the amount owed and the number of payments. So they're using it as a budgeting tool. People cite the convenience and ease of use as reasons for using buy now, pay later. They also say that, avoiding credit card interest, or they don't have a credit card, or they've maxed their credit card out as some of the reasons why they're using it. But there absolutely is a downside. And I think that's a really important question. So I want to spend a few minutes digging into some of the research that has bubbled up on this, and kind of debunking some of the paradoxes about this. So Scott, the other day, in preparation for this conversation, I ran across a study that was sponsored by a buy now, pay later company. And it said that 40% of consumers said they don't use credit cards because credit cards encourage them to spend money. And I was like, whoa, wait a minute, maybe we need to consider the source, because critics of buy now, pay later actually say that buy now, pay later fuels impulse purchases and encourages shoppers to spend more than they can afford. You might know who Susie Orman is. She's a financial guru, and she calls buy now, pay later the gateway to overspending.
Mm,
If you think about it, a buy now, pay later lender is not often required to evaluate the consumer's ability to repay. And so one survey said that borrowers that are using buy now, pay later are spending anywhere from 10 to 40% more using buy now, pay later than if they were using a credit card.
mm.
So I thought that was really interesting. A couple of other data points that I wanted to share with you, Scott. Almost half of shoppers said that they would spend less if buy now, pay later wasn't an option. And 56% of shoppers say that they've made a purchase with buy now, pay later that they couldn't pay off. And we'll talk about the policy implications in just a minute. But what's really concerning about this is that 46% of buy now, pay later users are opening multiple buy now, pay later accounts. This would be like me going to some of my favorite websites, Sephora, Best Buy, Home Depot, any number of department stores offer buy now, pay later now. And this is called credit stacking. So this is where consumers sign up for multiple buy now, pay later loans. And what we're seeing is 2/3 of the users are missing payments. And they said the reason that they're falling behind was because they lost track of the payments. It's unlike a credit card where you have a consolidated statement every month that tells you everything you've bought. Consumers that have multiple buy now, pay later plans, it's up to them to keep track of it. And so that's a problem. The other problem is late payments. 43% of buy now, pay later users have made late payments. And as a result, their credit scores have dropped. Some of them get contacted by debt collectors. And if you think about this more broadly, what are the implications for the credit market? Today, the buy now, pay later lenders aren't reporting some of this information to the credit bureaus, although that's getting ready to change. And so some consumers that need to build a credit history, those without credit cards or those that have limited credit history, are missing out on an opportunity. These thin file consumers may not have an opportunity to use this as a way to build credit. And more generally, if it's a service provider is not reporting the debt, or if these are even being paid off in a timely manner, for those customers that are trying to build credit, the credit bureaus or lenders may not be aware of all of these outstanding loans that they have. And so they don't really have an opportunity to accurately assess the state of a consumer's credit. There is good news. The credit agencies say that they are putting a plan in place to include buy now, pay later. So again, this is a new approach to payments. So we're going to see some evolution as this grows and matures.
Thank you. Now, why would a merchant or a business want to offer a buy now, pay later option? What's the upside for them?
Well, put simply, buy now, pay later converts shoppers into buyers. It offers opportunities for new customer acquisition, increased brand engagement, and some buy now, pay later providers are reporting significant increases in average order values, kind of what we talked about a minute ago about larger shopping carts. One survey that I looked at, Scott, said that one particular buy now, pay later solution captured 13% more new customers for the merchant or the business. And that's not surprising because, if you think about it, it expands customer choice at the checkout in the moment of need when somebody wants to buy something. So a lot of consumers say that buy now, pay later is a payment option that makes them more likely to shop with a retailer. And then, as we talked about, those thin file customers, maybe customers that don't have access to credit, this is a way for them to buy things from a merchant that offers buy now, pay later, that they wouldn't have an opportunity to extend the payments. According to FICO, there's 53 million adults in the US that don't have traditional credit scores. So it's a pretty good sized market.
Seems it, yeah. So Deborah, as you know, many community banks are already card issuers today. So what does the growing adoption of buy now, pay later mean for those card issuers?
Well, Scott, that's a really important question, and I'm glad that you asked that, and I'm sure our audience is really interested in that. So buy now, pay later is, a checkout button that's offered alongside the ability to pay with a credit card or debit card as a checkout option. So from that perspective, buy now, pay later may already be cannibalizing card volumes. According to one of the research reports that I read, as many as 62% of buy now, pay later users think it could replace credit cards. So from that perspective, buy now, pay later potentially threatens card issuers because their card holders that revolve balances on their cards may be the ones that are most likely to try buy now, pay later. On the other hand, breaking up a debit card purchase, for example, into 4 separate transactions for paying back buy now, pay later loans could represent a greater interchange revenue opportunity for some financial institutions. But do keep in mind that some buy now, pay later customers use their bank account information instead of a card product. So the transactions to pay that buy now, pay later loan would ride on the ACH rails. And then at that point, the bank is missing out on a revenue generation opportunity. So some debit card issuers are starting to view buy now, pay later instead of as a threat, as an opportunity, and may want to offer buy now, pay later as a card feature. We're starting to see the card brands, Visa and MasterCard, both jumping into buy now, pay later. So I expect this development to continue and help banks compete with the buy now, pay later players.
Good point. So we're all in the banking business. So I've got to ask the question, what is the view of buy now, pay later by regulators and policymakers?
Well, Scott, that's a really important question because, as you know, we've been in this business for a really long time. As with any market innovation, regulation often follows the emergence and the early adoption of payment innovations. So we're hearing from both sides of the coin. Critics are citing the lack of federal regulation, and buy now, pay later proponents say that their products are subject to consumer protection laws and regulations, including things like anti-money laundering, credit reporting, debt collection, and so forth. But given the meteoric rise of buy now, pay later, I fully expect heightened interest by lawmakers and regulators. And there's been a number of events. So I want to walk you through a little bit of a brief chronology of events that has just happened. So in 2021, regulators in California took steps against some prominent buy now, pay later companies. And the California Department of Financial Protection and Innovation released a legal opinion saying that buy now, pay later products fall under the regulatory definition of loans. And as such, buy now, pay later companies are required to be licensed as lenders. And then in a blog post this past summer, the Consumer Financial Protection Bureau put out this article that said consumers should be warned not to overextend their finances, even if buy now, pay later interest-free plans look enticing. They outlined concerns in 4 areas. They said most companies do charge late fees. Consumers should be aware of that. Unpaid debt can go to debt collectors. Number 3, customers can face overdraft fees. And lastly, buy now, pay later products don't always carry the same protections as the consumer protections as offered by credit cards. So in reading the tea leaves, it was clear to me that buy now, pay later is under the CFPB microscope, with future action relating to these late fees and other consumer protection issues. And more about that in a minute. Well, in November, the House Financial Services Task Force on Financial Technology held a hearing on buy now, pay later. And the California Democrat that chairs the House Financial Services, Representative Maxine Waters, said, well, the CFPB should be looking very deeply at buy now, pay later lenders and getting a full understanding of their products. That was followed up, not to be outdone. The Senate Banking Committee, the Democrats, called on the CFPB to strengthen oversight of buy now, pay later products. In a joint letter, they said that buy now, pay later products can cause consumer harm and are often structured to avoid regs like Truth in Lending or the Military Lending Act. And the very next day, the CFPB announced that they were investigating some buy now, pay later companies. They issued a series of orders to 5 companies, Affirm, Afterpay, Klarna, PayPal, and Zip, and they're collecting information on buy now, pay later loans, looking at accumulating debt, regulatory arbitrage, and data harvesting. So I think, Scott, these are 5 events that are very strong signals. The policymakers are looking at buy now, pay later. I expect this is the beginning of closer scrutiny and possible forthcoming guidance in 2022.
Oh, no doubt. It looks like they've got the attention of Congress and the CFPB. So I'm sure we'll hear a lot more on this matter in the coming year. Well, Deborah, that kind of wraps up our session today. I want to thank you for your insights on buy now, pay later. I would like to remind the viewers that ICBA Bancard serves the payments needs of the nation's community banks. So if you are looking at new products and services related to payments, or you have questions about payment issues, you've got resources at ICBA. So Deborah, again, thank you for your time. I'm not able to share my screen right this moment, but again, thank you for the information, and very good information for community banks. They need to be on top of this this emerging solution for payment. So thank you very much for your time.
Yeah, my pleasure, Scott. Thank you.